How risk comes from not knowing what you are doing. Trading can feel overwhelming if you're just starting. Whether it's navigating the countless terms, strategies, or the sheer unpredictability of markets, one thing is clear: risk can become an unwelcome companion. But what if you had the tools to reduce that risk and trade with confidence? Today we're breaking down Warren Buffett's powerful message: risk comes from not knowing what you're doing, and showing you that preparation, education, and analysis can transform your trading success. In this engaging guide, we'll explore how to build the knowledge, experience, and analytical skills you need to thrive. Get ready to leave reckless risks behind and step into a smarter, more confident trading path. Let's start with a critical question. What exactly is risk in trading? In simple terms, risk is the possibility of losing money in the market. For novice traders, risk feels amplified because they face a double challenge: navigating the complexities of the market while lacking experience. When you're unsure about market movements, don't have a strategy, or dive in emotionally, you're essentially walking blindfolded through a minefield. That's where understanding becomes key. Buffett's quote strips risk down to its core. It's not the market itself that's inherently risky, but the ignorance of how to approach it. Successful traders recognize this truth and focus on what they can control: preparation. So how do you start? Let's break it into 3 pillars: education, experience, and analysis. Imagine trying to play chess without understanding the rules. That's what trading without knowledge looks like. It's nothing more than gambling. But when you educate yourself about the financial markets, something powerful happens. Risk starts to lose its grip on you. Here's how education empowers your trading journey. Understanding market basics. Novice traders must first understand what they're dealing with. Learn about the stock market, forex, commodities, or any other area of interest. Understand terms like volatility, liquidity, and diversification. Resources like online courses, videos, or books can make complex topics digestible. Familiarize yourself with financial instruments. What are you trading? Stocks, bonds, options? Each instrument comes with different levels of risk. A stock operates differently from a forex pair, and not knowing that difference might lead to unnecessary losses. Simplify, don't complicate. Many beginners get overwhelmed by endless strategies, patterns, and terms. Start with the fundamentals. For example, understand what drives prices up or down before jumping into intricate chart patterns. Knowledge reduces emotional decisions. Have you ever felt panicked by a stock's sudden drop? Education keeps your emotions in check by giving you perspective. You'll understand temporary dips, long-term trends, and factors beyond your control. Remember, no one is born an expert investor. It's a learned skill. Even legendary traders like Buffett began by absorbing as much knowledge as possible. Education lays your foundation, but only experience gives you the tools to use that knowledge effectively. Think of it this way: theory tells you how to ride a bike, but practice keeps you balanced. Here's why experience is essential and how you can build it safely. Start small. Avoid diving headfirst into high-risk trades. Test the waters by starting with small amounts or demo accounts where you can practice without losing real money. Learn from losses. It's natural to face a few losses when getting started. Instead of fearing them, view losses as valuable lessons. Ask yourself, was I emotional? Did I misread the market? Learn, adapt, and move forward. Recognize patterns over time. One of the gifts of experience is your ability to start recognizing trends. Over time, you'll notice how markets react to news, how certain stocks behave, and how your own emotions come into play. Consistency builds confidence. Trading is not about winning big overnight. Instead, focus on taking consistent steps. The more you trade and refine your approach, the more confident you'll feel about making decisions. Building experience is an evolving process. The more you engage with the market, whether through live trading, rereading analyses, or studying past mistakes, the sharper your skills will become. Trading isn't guessing, it's informed decision-making. That's why analysis plays such an important role. This is where you take everything you've learned and apply it to make data-driven, confident trades. There are two major types of analysis that every trader should know. Think of fundamental analysis as understanding the story behind a company or market. It answers questions like, how is the company performing financially? What's happening in the world that could impact the market? For example, if you're trading a company's stock, learn about its earnings, leadership, and industry trends. Global events like changes in government policies or economic crises can also impact markets profoundly. While fundamental analysis tells you the why, technical analysis focuses on the when. It's about examining stock charts, trends, and patterns to predict future price movements. Key aspects of technical analysis include support and resistance levels. These are prices where stocks historically stop falling or rising. Recognizing these levels can guide your buying and selling points. Trend analysis. Is the stock moving up, down, or sideways? Trends reveal where prices are likely headed. Indicators. Data points like moving averages or the relative strength index, RSI, provide additional insight into a stock's direction. While technical analysis might seem intimidating at first, start with a few basics. Over time, as you practice and research, patterns will become easier to spot. When you combine education, experience, and analysis, you build a strong framework for confident trading. Here's how they reinforce each other. Education helps you understand what you're analyzing, e.g., stock behaviors or economic factors. Experience sharpens your instincts and provides clarity under pressure. Analysis ensures that decisions are well-informed rather than emotional. Simply put, these three pillars work together to help you see the market from a strategic lens, making risk an obstacle you can now overcome, not fear. Even with preparation, mistakes are bound to happen. Let's go over some common errors and solutions to avoid them. Trading without a plan. Going in without a strategy is one of the riskiest moves you can make. Solution? Develop a trading plan with clear goals, limits, and strategies. Emotional decisions. Fear of missing out, FOMO, or panic selling often undermine good trades. Stick to your strategy instead of letting emotions guide you. Overtrading. Placing too many trades or constantly chasing profits can backfire. Be selective and patient. Quality beats quantity. Ignoring risk management. Always have a stop loss in place. Risk only what you can afford to lose, and never invest money you can't. Lack of consistency. Jumping from one strategy to another will stunt your learning process. Find a method that resonates with you and refine it. Great traders are not those who avoid mistakes, but those who actively learn from their mistakes to improve every step of the way. Warren Buffett's wisdom reminds us that risk doesn't come from the stock market itself. It comes from stepping into it unprepared. But the good news? Preparation is entirely within your control. Through education, you gain the knowledge required to understand the market. By building experience, small steps will transform your insights into concrete skills. And with analysis, you shape those skills into smart strategic actions. Trading takes discipline, patience, and an appetite for learning. Start by mastering the basics, testing your strategies, and refining your approach over time. Risk isn't something to be feared. It's a shadow that disappears when you shine the light of understanding on it. So, are you ready to take charge of your trading journey? The path begins here. Remember, knowledge is your greatest tool, and preparation is your strongest ally. If you found today's video helpful, please like, subscribe, and share it with someone who could benefit from these tips. Let's trade smarter, not riskier.